Welcome to the video version of the Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart for August 7th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell to 1.89 from 2.05 last week, continuing in bullish territory. The total count of securities in bullish or bearish patterns decreased fractionally to 3,091. The count of bearish stocks increased 5%, while the count of stocks in bullish patterns decreased 3%. The Pirls P&F market breadth summary chart shows us a market now 6 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 40 points for the 18th advance in 25 weeks, at a positive 597.23 points. It continues above all 5 tops above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on higher average daily volume. Momentum, now up to a positive 144.52 from a positive 114.79 a week ago. The CCI 20 daily continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal in a Woody's uptrend begun 3 weeks ago. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 14 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly fell to 199.79 from 208.8 last week after forming a zero-line reject long entry signal for Monday 7/11 open. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: precious metals, banks, brokers, and some tech on top. REITs and some tech on the bottom. Bullish: KBW Bank has entered the top 5. Brokers and semis continue in the top 5. Bearish: REITs has entered the bottom 5. Disk drives continues in the bottom 5. Gold and silver has entered and leads the top 5. S&P retail has left the top 5. Oil and oil services have left the bottom 5. Focus this week from www.maldeneconomics.com. Don't Be So Sure That States Can't Go Bankrupt by John Malden. The following are some key points. Federal bankruptcy code permits cities, school districts, and other local governments to file bankruptcy. Some have done so, and I expect many others will in the coming years. States are a different matter. Current law doesn't let states go bankrupt yet. If the law should change and a state actually tried to file for bankruptcy, creditors would immediately file constitutional objections under the Contracts Clause and the 10th Amendment. The argument would go to the Supreme Court and probably take years to be resolved. An April 2016 Moody's report sees almost zero chance that the federal government will bail out an indebted state government. I agree. The other state delegations in Congress would quash any such idea. Those at the state level can't go bankrupt, nor can they expect federal help. Something will have to give in those states. Whatever the outcome is, it won't be pretty. And not every government below the state level can declare bankruptcy to discharge its pension obligations. What states are most likely to raise taxes and/or cut government services? JPM and PwC both point to the same four states: Connecticut, Illinois, Kentucky, and New Jersey. This doesn't mean everyone else is safe. You might live in a very sick city in an otherwise healthy state. Property tax revenue depends on property values, and property values fall if too many people want to sell. At some point, a death spiral sets in. Detroit went through this and is only now beginning to recover. People left the city of Detroit and moved to the suburbs. I think we'll see many more Detroits. Make sure you don't live in one. Thank you for viewing this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.